Welcome to Stock Market Today. I'm Nate, your guide through the ups and downs of the financial world. Today we have a special guest, Jet, an emerging markets analyst. Jet, it's great to have you with us.
Thanks for having me, Nate. Excited to dive into today's market activity.
Let's jump right in. Today we saw the S&P 500 slightly down about 0.1%, but the real story seems to be the volatility in individual stocks. Can you explain what's driving that volatility?
Absolutely, Nate. The market is experiencing a mix of sentiment, which is pretty common in today's economic climate. While the S&P 500 dipped a bit, many stocks were swinging wildly up or down, reflecting investor reactions to news, earnings, and broader economic shifts.
Speaking of swings, some stocks saw incredible rallies today. For instance, one stock increased by almost 200%. What's going on there?
Right. We had a standout performer, INBS, which surged nearly 200%, closing at about $12. Such dramatic increases often stem from specific catalysts, like strong earnings reports, exciting new partnerships, or even market speculation. In this case, there may have been some favorable news that really caught investors' attention.
That's fascinating, and it seems like there were some big losers too. Can you tell us about those?
Certainly. On the flip side, we saw stocks like ILLR drop more than 59%. Such steep declines often signal negative news, like disappointing earnings or unfavorable market conditions. This creates a stark contrast to the gains we saw in other areas.
So it's a bit of a mixed bag today. How are different sectors reacting to this volatility?
Exactly, Nate. The technology sector is a perfect example of this mix. Some tech stocks are thriving, while others are struggling under pressure from rising interest rates and concerns over economic growth. Healthcare and biotech are also showing diverse results based on clinical trial outcomes and regulatory news, while the energy sector remains more stable, although still affected by oil price fluctuations.
With all this movement, what should investors keep in mind moving forward?
Investors need to stay informed and adaptable. It's crucial to monitor individual stock performance and sector trends closely. With the market being as volatile as it is, balancing potential gains with the risks of losses is key.
To wrap up, what are the key takeaways for our listeners today?
First, expect volatility as a normal part of the market right now. Second, focus on specific catalysts driving stock movements. Lastly, stay informed about sector trends and economic indicators to better position yourself for potential opportunities.
Thanks, Jet. Always great insights. And to our listeners, remember to stay engaged with the market and keep those strategies flexible. Until next time, this is Nate signing off from Stock Market Today.